Australia had seen decades of housing price increases. A mild stutter during the financial crisis didn't stop the major cities from zooming ahead. We see the same thing which has happened in Canada as an example. There have been many excuses for why housing has accelerated to new highs. Each country has their own talking points, but instead, why not just tell the truth? Easy monetary policies, which then became even easier, extremely loose lending standards, and increased appetite for risk. Altogether, we have created a monster. You came here for the truth, so let me unveil that for you. One of my favorite subjects to talk about is real estate. And for my friends in Australia, this video is for you, but I also want to touch on Canada as well as the UK and the United States. But no matter where you live around the world, this information is very important. This is a jam-packed episode where I've covered way too much data, but that's generally what I do, so let's get into it right away. Melbourne house prices have fallen at their fastest quarterly pace on record amid tightening credit conditions and soaring sentiment ahead of the release of the Banking Royal Commission's final report next week. They're using this excuse as the reason why, but hang on to that thought for just a moment, okay? At the very bottom of the page, if you had asked me in September last year, I probably would have been surprised to see Sydney and Melbourne values down more than 4% over the rolling quarter. This happens to surprise these people all the time because they're expecting increases. They're always expecting positivity at a time when we should be seeing that because interest rates are very low, mortgage rates are very low, the lending standards, as far as I'm concerned, are pretty relaxed as far as it goes. And there is every possible method to make sure that people get their homes. You hear it in the news all the time. We are tightening our belts. Those people can't do what they did during the financial crisis. But of course, that really isn't the case. Maybe it's not as rampant as it was, but let's be honest, it's still going on today. This is one. Now let's move on to this. Housing prices in Sydney have recorded their sharpest downturn in more than 2 decades. Falling by 10% in the past 12 months. And actually, if you look at it from the peak, it's even worse than that. The latest report from Domain Group for the fourth quarter of 2018 has revealed Australia's housing market has continued to slow. The national prices recorded the steepest annual fall in 15 years, while Sydney's house prices are back to mid-2016 levels. Let's say it for what it is. These housing prices are still very high. That's a fact. However, these prices have come down in a market that they said specifically it will never go down. Housing prices will not go down. It's not possible. Don't count on it. So you can put your money in and you'll be guaranteed to have higher prices. But of course, that's not the case. That's not happening today. And you can see it here for yourself. In the third paragraph, there's suggestions that housing prices could fall 25%. That would be very realistic to see that. We would actually think that they would need to come down a lot further than that to make it affordable. But to see a 25% decline wouldn't surprise me whatsoever. And the same thing goes for Canada as well. And that's not because of any particular crash that happens or any crisis. That's just fundamentals. The prices need to come down to a more realistic level because they went up so high in such a short period of time. They need to correct. I'm not even talking about a crisis here. I'm just talking about the prices correcting back down into a level that is a little bit more realistic. Now, if we were to go into the problems that people have with debt, which we'll cover today, then that's a whole different issue. And things will get a lot worse in that regard. But just for the fundamental aspects of the market, we're looking at 25% being very realistic as far as I'm concerned. Australian new home sales plunged by 6.7% in December. They now sit at the lowest level since late 2012. In December, quarter sales nationwide slumped by 14.9%. Sales in Queensland, New South Wales, and Victoria, the most populous states, slumped by 26, 18, and 10% respectively over the year. The sales are down, and doesn't that ring a bell? We're seeing the exact same thing in most major cities around the world, whether we're looking at Canada or the US. In London, we're having big issues right now. Australian housing indicators are weakening substantially, leading to increasing chatter about the prospect of RBA rate cuts. Are we going to go ahead and see them already going to cut rates? Are the rates going to be reduced in the United States, Australia, UK, Canada, and so on? Perhaps it will go in that territory. We don't know. Will they just bring them into the negative? Why not? Why not give people free mortgages like we saw in Denmark? That actually happened for a period of time. In fact, there was a very, very small handful of individuals who just for a short period of time were actually given money to take a mortgage. The interest rates in the negative, it's a variable mortgage, and they actually were getting paid. Now that is complete insanity. There should be never a reason that this happens, but of course that's what they do. Look at Amsterdam as an example. I know somebody who had their home 106% financed. Everybody is gonna buy a home when you're getting 106%. It's a simple matter of fact. But then there are those who say not everybody can get a mortgage. Let's be realistic. Let's do our homework here and look at what they're saying. You have to have this much income, you have to have this much of your assets here, you got to be paying down, you got to have a down payment, and so on. Well, of course, that's not the case. We'll get into that more. This particular billionaire is talking about the different strategies that they should use in order to entice buyers to get into this market, talking about easing the taxes, getting those foreign buyers in there, trying to be able to use their supers for the ability to buy the home. And of course, there are first-time home buyer type plans that are available in Canada. I'm sure they're available elsewhere, trying to take money out of where they have it and put it into a home. And I think that's a great idea, actually, because of course the supers, the 401ks, the RRSPs are simply a waste of money in my opinion. But anyway, that's just the way it is. So they go into more issues here, including the number of borrowers that have negative equity, and that's growing. You have to understand what that means. People own a home, let's say the mortgage was $1 million, or the home is worth $1 million, and suddenly now housing prices come down in Sydney in the last year by 10%. Now it's worth $900,000. So you actually are in negative equity at this point by a significant margin. You're paying down into a mortgage that is simply worth less than what you initially agreed upon. This is the problem when we see the fluctuations in the market. Everybody's so happy on the way up, and everybody is extremely mad on the way down. It hurts a lot more on the way down. We shouldn't see this type of activity happening within the real estate game. It shouldn't be like that, but it has been, especially over the last few years. It has gone and really accelerated. It's not subprime mortgages that you would see 2005, 6, and then into 7. No, this is just people buying their homes. Of course, you have investors there, you have the house flippers, you have all that business still happening today, but there's a big difference between now and then in some ways, and I think that's not being highlighted enough, okay? Then you have this. As house price falls accelerate, a growing number of mortgage holders across the country are being left in the negative equity prison, a problem that is never highlighted to you. They will give you a mortgage as long as you can find the financing from the appropriate lender. You don't necessarily just go to the bank, walk in and say, I'd like a mortgage for this home. There are many alternative lenders. So you can go to the bank and, for example, you can get a loan for 80% of that value. Maybe though, it's too expensive for you. They're only going to give you 60%. But you can then finance the other percentage with a different lender. That's what's happening to a lot of people. And of course, there's risk involved there. The interest rates are higher. There's a lot of different fine print along with that. But you have to understand the way this works. People can get money from alternative sources, not just from their normal bank that they walk into and do banking on a daily basis. Borrowers in negative equity find themselves paying off mortgages for more than their properties are worth, unable to sell without being left with an outstanding debt to the bank and potentially facing higher interest rates. Further along in this article, they basically get into the fact that the expectation is that the market could be anywhere around that 20% mark. People generally put down 20% on their home. Well, That's what they're suggesting anyway. 20% down on their home. And of course, if the housing prices fall by 20%, then suddenly they're in negative equity. But there are not just a handful of people. In this article, they talk about the fact that potentially 1 million Aussies could become prisoners in their own home. And that's the way that they look at it. Very interesting. All I wanted to get to in this article is basically the fact that they are now talking about this. Many different economists, many different news agencies have talked about the fact that the Reserve Bank of Australia, the central bank in Australia, needs to cut rates in order to stimulate the buying. And they can certainly do this. However, look at what happened in the United States. Interest rates, well, mortgage rates anyway, came down a fair bit. And they did so simply because the commercial banks needed to stimulate it. They didn't get that cut from the central bank, but they went ahead and did so. And as a result, housing prices stayed where they were. They didn't increase as they were doing before. People are still doing the wait and see. So it doesn't necessarily translate into that stimulation, increased prices, more sales, and so on. But people are just cautiously approaching the situation wherever you look around the world. The biggest problem that we have today is debt. Australian housing overvalued and over leveraged. The same situation in Canada right now. New Zealand also, same problem here. Combined price to income and price to rent valuation, that's the red line. And the housing debt percentage to income, that's the black line. I mean, come on. There's no possible way that people are ever going to be able to pay this back. The amount of debt that they have is absurd. It's not just Australians, but I want to congratulate you for beating Canada in this respect. I want to see it broken down by city, actually. That would be interesting. I saw the numbers for Canada and it was absurd. It was insane. When you see that Vancouver was something between 230% to 250%, somewhere in that range. I can't remember right now. And Toronto was over 200%. Debt to income ratio, you're crazy to get into this level. People deny it. No, that's impossible. That's impossible. People can't do that. You can't do that. There's no way. And I hear all this talk and it's just nothing but the mouth flapping open and closed. It's ridiculous. Let's get your head in the game. Talk to people on the inside and see how they offer you a way around. Well, you know, we can play with the numbers a little bit. We'll make sure you're taken care of. We want to help you out, right? You're a good client here. We're going to help you out. Don't forget to watch part 2 of this video. We're going to get into much more detail. We're going to talk about the US, the UK, Canada. I want to get into them all. I want to look further into Australia, of course. So click on the link in the description and I'll see you there.